Hey, Suffield, Connecticut homeowners. The national headlines might be sounding alarm bells. Recession fears, inflation worries, consumer spending pullbacks. But what does that mean to you as a homeowner here in Suffield, Connecticut? Let's talk the facts, let's talk local, and let's talk strategy in this month's Suffield, Connecticut Housing Market Update. I'm Stephanie Salerno, your local real estate expert and team lead of the Stephanie Salerno team at Coldwell Realty, right here in Suffield, Connecticut. If you want to stay ahead of the housing market and make smart moves, please be sure to subscribe to our channel by hitting that subscribe button below. So first, let's dive into what's been happening in Suffield. In Suffield, in March, 9 homes were sold, and that's down 36% from March of 2024. 5 new listings came on the market, and that's actually down 29% from last year. The sales price to list price ratio is 101.3%, and that's down 4%. And the average price per square foot was $235, and that's actually down 6%. And March's average sale price was $397,000, actually down 36% from 2024. But important to note here, that's just a snapshot for March sales, which was actually 9 sales. So I want to make a note, that's not relative of a market that's declined. That's just a snapshot of those sales. And we'll talk about what's happening with prices shortly. March's average days on market was 40, and that's down 69% from 2024. March's month supply of inventory is 1.89 months, and that's actually up 32% from March of 2024, which is a great thing, and down from 3.33 months in February of 2025. Now, how that works is 6 months is considered a balanced market. So anything more than 6 months is a buyer's market, and anything less than 6 months is a seller's market. So at 1.89 months, even though inventory has ticked up a little bit from last year and actually a little down from February, we're still very much in a buyer's market, and we remain to be a restricted inventory market, unlike what we're seeing in some of the national headlines. Nationally, there's a lot of noise. Recession fears are rising. Mortgage delinquencies are at 20-year highs. And does the housing market look like 2008 again? But here's the truth. Many of those are misleading. They maybe isolate data to give us the story that they want, like they'll talk about just multifamily homes. Or we might be looking at national averages that don't at all reflect what's happening here in our local market. So let's bring this closer to home. Here in Suffield and our surrounding Greater Hartford and Hampden County communities, inventory has remained tight as compared to the national averages, as we just saw earlier. And while we are fortunately seeing some growth, we're not at all in an oversupply as we're seeing in some markets across the country. And as I sit right here in April, inventory in Suffield remains limited, especially if you're in that $300,000 to $500,000 price range, which tends to be a really popular sweet spot for local buyers. So what does this mean for you? Well, if your home is priced right and properly marketed, it's still positioned to sell competitively, even with rising days on the market nationally. So let's address the fear. This data shows the consumer spending dropped earlier this year, and that sparked quite a lot of recession speculation. As Alex Jacques from the Groundwork Collective puts it, what you need to keep an economy chugging is businesses investing, businesses hiring, and people spending money. If people are apprehensive about whether their jobs are going to go away or whether there are going to be more layoffs in the future, you're going to start seeing pullbacks on spending. But now if we go back, there were actually 2 pullbacks in February of 2023, a pullback in spending of March of last year, and the one we just talked about in January of this year. And that's a sign of consumers saying, I'm not sure, or you know what, it was January, maybe it was a little bit of a hangover from Christmas. But it certainly prompts these concerns. And listen, there's a lot of volatility in the market, so I completely get it. Mark Zandi says this: the risk of a U.S. recession starting in the coming year are uncomfortably high and rising. I will put them at 35%, up from 15% at the start of the year. So you add the recession talks to a lot of other things that are going on. So you layer on a lot of different things that add to the confusion, like the uncertainty about tariffs, which is leading many to say we're heading into a recession. Now, I'm not here today with a crystal ball to say whether or whether or not we're heading into recession. But what I do want to give you today is some facts surrounding the recession and answer the big question: is a recession bad for the housing market? This side here takes a look at recessions going all the way back to the 80s. There have been 6 recessions in this country, and understanding what happens to home prices during that time. Well, for 4 of the 6, prices actually went up. 2 times they went down, once marginally in the early 90s, but really what everyone remembers is 2008, when prices dropped almost by 20%. The fact is, that actually had never happened before, and 2008 hasn't happened since. But I understand this is what we all remember. It was the last recession, and that's what's in our heads. But what I can say with certainty, if we do have a recession, we're in a very different housing market. So let's address the big elephant in the room. Stephanie, this feels like 2008. So it's not exactly exactly like 2008, and here's why. Almost 40% of the homes in the United States are owned free and clear, and another 28% are equity rich, meaning that homeowners have at least 50% equity in their homes. And the vast majority of homeowners have mortgage rates under 6%, many in the 3s, 2s, or even lower. That's a completely different financial landscape than we saw in 2008, when adjustable rate loans and over-leveraged buyers triggered mass foreclosures. Today's market is built on equity and stability. Another thing to note as well, in 5 of the last recessions, mortgage rates went down. Lower interest rates typically made buying more affordable and helped stimulate the market. So what are experts still saying about 2025? Out of 23 major housing economists, the average forecast is 2.7% price growth. Wells Fargo, AEI, and Goldman Sachs are even forecasting stronger appreciation, over 4%. Sure, some are more conservative, but the majority predict growth, not decline. So nationally, home price appreciation is supposed to be around 3%. And that's a sign of a healthier, more sustainable market. And locally, we're also seeing price moderation, not a decline. So in other words, sure, prices aren't skyrocketing like they were in 2021, but they're still holding strong, especially in desirable towns like Suffield with limited new construction and strong community demand. Homes might be taking a little longer to sell than they did in the frenzy of the past few years, but they're still moving. And we're seeing many homes still gone within the first weekend. Nationally, the median days on market was 53 days. And we talked about it earlier, the average days on market in Suffield were 40, and that's actually even down from last year. So despite days on market increasing nationally, we're not super feeling that locally because we are still so restricted inventory-wise. Adam and Realtor.com all forecast 10 to 15% growth in inventory this year, but that is nationally. Here in Suffield and Northern Connecticut, inventory is still very tight like we've seen earlier, but homes that are priced correctly and show well are still selling super fast. So this local inventory shortage means less competition for you if you list now, before more sellers jump in late spring. So if you're a homeowner in Suffield, what should you be thinking about? Well, here is a key question. Do you still see yourself living in your current home 5 years from now? If the answer is no, then it may be time to strategize. So if you're wondering what your home is worth today, or you want to talk about your options, please feel free to reach out. I'd love to help you create a smart strategy for your move. Or if you're just really curious what your home might be worth, click that link below for an instant home value opinion. And if you please make sure you like this video, send it to a friend, and subscribe to our channel for more future Connecticut housing market updates. And also, if you have any questions, you can drop those right in the comments below. All right, this is Stephanie Salerno with the Stephanie Salerno team in Suffield, Connecticut at Coldwell Banker Realty. And this has been your April Suffield, Connecticut housing market update. We'll see you next month.